Hello and welcome to the L&G Just Covered podcast, where we talk to advisors and key stakeholders in the intermediary space. My name's Wayne.
And I'm Clodagh, and today we have Aish, who is a business coach, business consultant. A bit of everything, Aish.
Bit of everything,
Yes.
yeah.
Great to have you, Ash. Thanks so much for coming on. And have we had a business coach on before? I'm not sure we have.
Oh gosh, it is setting this. Yeah, that's some pressure there.
No pressure at all. Great to hear what you do. I mean, you're doing some fantastic things. You've told us before with regards to advisors and helping with regards to customer outcomes and all that. So absolutely brilliant to have you on today. Thank you.
I'm really looking forward to it. Yeah, I said it's a bit of a trek for me. I never come out of my cave, so I'm quite enjoying being out and about. So yeah, I'm really looking forward to it.
Great to see you in 3D.
I do exist. I'm not AI.
Yeah, generated.
Yeah, too right. So, in terms of your journey then, just before we came on, actually, we were talking about that. So give us a bit of a précis of how you got into the industry, how you got to what you're doing now, and trials and tribulations and all that type of thing.
Yeah, of course. I won't bore you too much with it because nothing worse than a laborious backstory, nothing worse than that at all. But originally was, like every person, got into financial services by accident, didn't follow it for love, but really more for money. I was in a background in performing arts originally. So I trained in performing arts. Tried to be a mortgage advisor, was relatively okay at it, but went out on my own, so went through the corporates, went on my own and realised I had no idea how to generate any leads. And that was, as I think most people, hugely, because, I was like, you think that you're being provided those leads, nothing comes along. When you actually go on your own, you're not going to make any money and you're only as good as the leads you get. And so this would be maybe 13 years ago, I decided I'm going to use social media. And at the time, it seems normal now. We're doing this now. This is kind of crazy. In fact, it's really lovely because at the time, no one was doing it. Literally to the point where my dad worked at Connell's group and he was really high up in there and he was like, what are you doing? You're an absolute idiot. Don't do videos, everybody.
Well, it wasn't happening, was it?
No one.
That wasn't the way. That wasn't the old school way, was it?
Not at all. And the compliance with the networks were like, what? Everybody was like, what the hell are you doing?
It was red flag city from the compliance.
Huge. Everything was going terrible. And I was one of the first in the country to do it, which was exciting. Looking back, it's like, I knew what I was doing. At the time, I genuinely had no idea what I was doing. And it really wasn't working that great for a while. And then it did. It just kind of switched. And when it switched, I started finding that everything, leads were coming in, everything was going well, but more brokers were reaching out to me than clients. So more brokers are reaching out to me going, can you teach me how to do the same things you did? Okay. And I don't like doing compliance. I'm ADHD and dyslexic. So the idea of I was going to get paid to do the stuff I loved versus doing that, I moved into marketing and it's just kind of grown and swelled up from there really to the point where I then started teaching sales and then I started teaching client retention and then I started teaching staff acquisition and hiring because at the end of the day it's all based around the same concept. It's all based around this idea of you're attracting people, so you're attracting people in and you're trying to get them to make a decision that is in your favour. Yeah. So it's all based around sales psychology.
And at what point you mentioned it clicked. So what can you actually pinpoint a time when you felt, okay, something's happening here?
Yeah, there's a few. There's a few little ones.
There was the money in the bank.
Yeah, there was that one. So there was a few points where it clicked. One of them was during COVID, all of a sudden people who were laughing at me, all of a sudden were like firms were coming to me and go, can you help me? So that was there's some validation there. That was one moment. Another moment though was when advisors were starting to because I always believed, and we probably unpack this more, and I don't want to ramble too much, so please don't jump in, but I always believed that the income ceiling was much higher than we realised in our industry. In our industry, when you look at protection and stuff like that, the actual income potential is incredibly high, as well as good outcomes for clients if you marry them together. But we always seem to have a cap in our industry about it. And there was a moment with a few of my kind of advisors I'd worked with for a while where I was like, try this process, throw out all of the old sales stuff, everything we've been told, just throw it out and let's try this. And it worked. They started to make, and I mean, they went from doing 10 grand months to £30,000 months. And then what started happening then was networks would reach out going, how are they selling this? And they were selling products like Fib that no one, hardly anyone sells yet. It's one of the best products ever. And there was that moment where that to me was probably the defining moment where I was like, we can do this. This is this. And that was a life-changing moment. And it obviously reflected financially in myself and things like that. But it was that was the moment where I was like, everybody who was good, who was doing that elusive as a self-employed broker, that 6-figure kind of turnover, we were able with this process to make them like 200, 250. And not just that, help the actual client get the right outcome, which is the bit that is all centered around. And
of course,
that to me was that moment. And that would have been about 3 years ago. And I remember walking to the Tesco's with my wife and my 2 kids and going, I actually know what I'm doing. And she was like, what are you talking about? And I was like, I've just been blagging this for the whole time. I was like,
it's clicked.
Now I know. And so, yeah, probably it would be that moment there, which is a bit I'm proud of.
You know what? You must get that, like you have your kids and you're proud of them, but your business, you have those moments where you feel, do you know what, I'm doing the right thing because now that advisor has gone out, seen that customer, and the customer is not walking away with just mortgage protection. Yeah. They've got their FPIP or their FIB, their kids are protected, you know, you've got single policies, you've done the right, a holistic approach, and the whole thing is covered. And I think that's a moment where you can go, yeah, there's more people walking around Tesco's that are protected because of what you've done.
Oh, gosh.
You know.
100%. I think, like I said, one of the people that was one of my original clients I worked with is a guy called Matt Chapman. And I remember him talking about how he wanted to make a difference.
Yeah.
And he was like, I want to make a difference, you know, and he was looking at doing things like financial education and stuff. And I was saying to him, like, you can make more difference by coaching advisors in this space to actually sell protection, because you're going to make more real impactful difference to people's lives than teaching them how to budget on a spreadsheet, which I think people miss. And I think I love it. I absolutely love that point of like, if you actually let the protection get out of the way and let the protection sell itself and just look at it from a human perspective, which is all we've done, it completely changes the game. And it's so rewarding. It's rewarding for the client. It's rewarding for their client. Is rewarding for everybody, both financially and security and kind of ethically. It just is, it's amazing. And so it is a win-win-win, which not in our industry, but from the perception of our industry from outside, it's like, oh, there can't be. And I'm like, well, it absolutely can. Yeah. You know, and that to
and
me
we know there is. And
well,
it's
all do,
and it's just showing how you can promote that, but people having real case studies, actual impacting clients' lives in that positive way. I'm just interested, you talked about, it's about attraction and stuff.
Yeah.
So as and when you've come into the industry, you've started your business up, I presume you've done a lot of learning as you've gone along. Have you had to read up on stuff? We've mentioned behavioural science before when we've spoken just before we've gone live today. Tell me a little bit more about that and what you've done on that journey in order to articulate some of that stuff, obviously in a simple way for your clients.
Yeah, no, of course. So for me, if I take it back to make sense of this, so I was working in a financial planning firm, and there was a guy that came in, a behavioural economist called Mark Pataccio, who came in, and he came and trained us all. This would be, again, probably 9 years ago, maybe 10 years ago. And he came in, and I'd never heard of a behavioural economist before. And the typical thing, I was probably in that financial planning firm, people who listen to this and watching this will get this, is I was young and I brought the average age down in that room by a significant amount. Like there was like, everyone around was like, I'm happy, I've got my client bank, I'm not interested. And poor old Mark came in and he was teaching them all this incredible stuff, and everyone was just doing the whole, whatever, like I've got my trail, I know what I'm doing. But for me, it was like, I'd never heard anything like it before. He was like, he was phenomenal. And he took me under his wing. I was very lucky for that. He took me under his wing and he was teaching effectively with behavioral psychology, this idea of behavioral economics, this idea of psychology around economical decisions. Now, I'm not a behavioral economist at all, but I've been lucky to be surrounded by somebody who is one of the top in our industry, actually, at what he does. And from there, then my obsession just got into marketing, consumer psychology, what they call it, neuromarketing. So this idea of like how people interact with like marketing decisions through like a psychological point of view, through attention, and then that moved into sales, and then into what we call like social selling, which is more of a kind of pseudo science of it, which is like selling through kind of influence principles and all that stuff. So yeah, I don't want to go way too deep into it because it is a real, but like at its fundamental core, all it literally is, and I say this to my clients, is when you follow the process that kind of I teach, and there's not just me, there's people out there, not so much in our space teaching it, but there are people out there in other industries teaching it. It's not like a unique concept. Traditional sales is like fighting against the current. You know, it's objection handling. Yeah. It's tell me why. What would you do if little Johnny couldn't go to swimming lessons and all this stuff we're taught in insurance training, which is just antiquated and quite frankly dumb. Whereas actually, with the way that we sell, which I would class as like social selling, is we're swimming with the current. So we're moving with the way that the consumer actually thinks. So we're showing them, using things like loss aversion. What would your life be like if you didn't have this? But not telling them, letting them feeling it, sit in it, and see the decisions and, price anchoring, things like that. So it's actually way easier. And the premiums go up significantly. And the reason they go significantly is because the actual cover to fully eliminate the risk, because our goal at the end of the day as a mortgage advisor, so I can ramble on, so please tell me, but our day as a mortgage, our thing as a mortgage advisor is a mortgage is a significant debt, and with a significant debt comes significant risk. And so our job should ultimately be to eliminate that risk.
Yeah. L&G Apply is our new annuity application platform, designed to save you time on every application. Sign digitally and avoid rekeying client details. Tap the link in the episode description and our team will reach out to help you get started.
And it's interesting because the way you're going with the flow, you're going with the customer. You're looking at the loss aversion piece as part of it as well. Do you think it's helped you along the way, the types of processes that you're using to crack that, I call it that non-tangibility factor with protection, because people can't test drive it, can they, until it's too late? Life's happening, that type of thing. Yeah. And you've got to go with them and get them to experience it, but doing it in the right way, not this disturbing and all that old school way of doing it. So have you found... I suppose, are you on the way to cracking it? I suppose
I have cracked it, to be honest. I have cracked it, yeah.
He's got a waiting list.
Oh my gosh, yeah. I've got, yeah. We cracked that. We cracked that about a year and a half ago. So the way you do that, if you want me to share it with you, I'm quite happy to share it with your viewers and listeners. But the way that we do it, you can do it in different ways. But we do what we call a financial resilience check. And so how you do that, with mortgages specifically, but you can do this in anything. You can do this in wealth. You can do it in pensions as well. Not in pensions, in like protection only. A little bit harder, and we can unpack the differences on those if you want to. But with mortgages specifically, what we do is we take the mortgage and the protection together at the same time. Yeah. And then we do what we call a submission call. So with that, you're putting the two together into a mortgage package. The mistake that people do in our industry is that they separate the two. My advice comes in two equally important parts. No, we're splitting it. It comes in one part. To do the job properly, you should be doing both parts. And it's just what we call a mortgage package. So when you go to submit the mortgage, before you submit it, you should have done the pre-medical underwriting. You should have everything you can for the full case of how that kind of works. And then what you do is you run them through what we call a financial resilience check. So it's got nothing to do with the mortgage. We're just trying to see how financially resilient you are. And this would be, ideally, we're looking for 60%. This is numbers, so you guys, these advisors, they'll understand. But it's like, we're looking at keeping that below 60%. 30% on your mortgage, 30% on your lifestyle, with an additional 40% that you're putting away into savings or whatever to be able to weather anything that comes up. That would be classed as what we call a financially resilient person. In today's modern world, like very few people fit into that, but that is logically correct. That would mean that if one arm fell, that 40% could cover that. So we just run a check with them, and we run that check with them when we run it off what their income is, net income. It's no like budget planners. It's not really, it's literally three figures you need. What's your monthly mortgage payment? What's your net income combined? Or individually then combined, and then what is your 3-month average of your spending? So you'd have to go into their bank statements too, but you just need to get the average of what did they spend over 3 months. And then all you do, and it has to be factual. It cannot be, and this is where a lot of advisors, when I speak to them, they go, I don't want to do that because they don't want to spend, which is dumb. Like, just do the job, like sit and go through it, because they'll go, it takes a long time. It's like, yeah, but if it's not factual, if it's hypothetical, if it's ONS figures, the moment it goes into that, you're selling. You're not advising, you're selling now. You're trying to get them to see it. Whereas if it comes from facts, I'm not selling you, I'm just showing you the risk. And then all you have to do is you just set it up and then you delete one of the incomes.
Including the word fact finding, isn't it?
Yes, it's ridiculous. And then you delete one of the incomes. And when you delete the income, it goes from like, you're spending 73% on your thing. And then it's like, delete the income, 200%. So it would cost you 200% to live. You don't say anything. You just watch, and their face, you have to do it on Zoom and stuff like that, but people, their faces, and it all like is like a RAG system, so like a red, amber, green. Yeah. So they can see it visually as well. And their face, you can see them. They look to their partners and they're like, oh no. And that is loss aversion.
People don't think about it, do they?
No,
that's what it is. It's just bringing it to the fore so they know and they understand the implications of something happened.
And then if you say, price anchor to that, well, actually, to eliminate that risk, because you've done your research, you know what it is, to eliminate that risk, it's going to cost you around 5%. Well, 5% to protect 100% of the risk is a no-brainer. It's that anchor. But you've got to, but it's a show, don't tell. And it's easy to explain on here. It's when you see it though, whenever I work with clients, that's that moment. I love it with clients when we get to that point where you're like, I'm like, this is the bit that if you do this, this will double your income and make everybody also
But
fully protected.
You must get advisors that say you have to try because you will fail until you get it right.
Oh yeah, they really struggle. Yeah.
And then they have that moment. It's worked, brilliant.
Yes.
So you must feel like the proud daddy moment when they ring you up and go, "It worked," and my
gosh,
average £50 sale is now a £200 sale,
Yes.
and that customer is fully protected.
That moment is the moment that made me decide that this is what I'm going to do. Like, I'm not going to scale my
get
business.
so much
And customers
joy from
understand, don't they? Because that's the key to advice. On the back of person's advice, customers have made an informed decision.
Yeah.
It's their decision. That's
Their
what advice
decision.
is about.
Yeah.
You've educated them. They understand. They feel empowered to make that decision. Therefore, they do it.
And
so
then
that pride you must have.
Yeah, and then they understand what the direct debit is, because isn't this whenever they go through hardship and they look at their direct debits in January and go, what can I cancel? And then they go, well, I can't cancel that because I understand what that was
Well, the old
for.
saying is people remember how they felt at a particular
Exactly.
time. So remember they felt, right, while I'm doing this, I know why that direct debit
Well,
is
this is
going
the
out.
issue. We sell. Oftentimes, we sell the product, and we should be selling the outcome. That's another bit with that massively. Yeah, for sure. It's a big one. I love it. For me, I think everybody buys in. It's very easy. You do also, as you said, there's a lot of skepticism around it because you don't sell. Like that's actually the way I described it to somebody. I wrote in a magazine recently about it, and I wrote like the way to think about it is like a cigarette packet. So if you think about a cigarette packet, and I'm not absolutely clued up on this completely, but a long time ago, everyone thought cigarettes were actually healthy, not just
trendy.
like they were trendy, they were healthy, they would get rid of coughs. So you have that same with asbestos, this type of thing. Didn't think it was trendy, but like that was the same thing. So you can't blame people who didn't understand the risks for the situations they found themselves in later on. That's the thing with cigarettes. But now we know, and it's plastered all over the carton. It's all over that. Smoking kills. That's all over it. But we don't stop people from smoking. We make they have the choice to decide: do they accept the risk, or do they reduce the risk by maybe vaping or whatever, or do they eliminate the risk and stop? This is the issue that we don't do when we sell insurance. Is that we're taught to go to shock and to scare and to pressure, but actually, all our job is to do is go. Oh, we're just going to stick a smoke and kill sticker on it and go. Just so you know, this is your situation. Yeah. This is what will happen if you lost your job. Like, as in, like, you were unable to not lost your job because that's ASU, but like if you were, and I always get pulled up for that, so I don't know because everyone does. But if you were unable to work and your income stopped, this is what would happen if you both lost. And this is the numbers get scary. If it's a primary earner, it's normally about 200%, meaning they need 200% to maintain their lifestyle. If it's a secondary earner, it's normally about 110%. This figure's always vary, but it's roughly around that. If both of them lose, it's 1,500%, meaning that's how much income is needed to sustain each month. And what people also forget of this, they say, like, we'll cut back. But people don't want to cut back. That's not, there's a whole thing with that. So when people cover we'll just cover the mortgage amount on insurance, or no, they don't want to cut back. The whole goal is to protect our life. It's not to go just so you can kind of die in the corner slowly, but it's not that. So you have to protect what they have. Yeah. That's the loss aversion. And then also draw attention to the risk, and then let them make the adult decision. And that's what I'm a big against objections. If you've done your job correctly, you've addressed the obstacles beforehand. You shouldn't have any. Do
you think the networks need to do more? Because when you think about the networks, I used to be an advisor, and it was all about you get training on objection handling, because they were straight away, this is what they're going to say, this is what you do. But all this behavioural science and how you position it differently. It obviously works. There's a different outcome.
Yeah. I think the networks are completely wrong. And I'm happy to say that. I don't mind that.
We might have to edit that. But we're having an honest conversation.
It's fine. The networks are, they don't, I think they're teaching outdated information.
Yeah.
They're teaching outdated information. Everybody's trying to fix a symptom and not the actual root cause. And I think that's the problem. And it's a shame. Maybe it's a budget thing. It's also with the networks is a funny situation I find with the networks, because the networks, which I have a lot of respect and time for a lot of them. Yeah. The issue with the networks is, at their core, they don't own the advisors. So this is why I always try to say, they are, the advisor is the client. At the end of the day, and I try to explain this to people when people talk about the networks, they're like, oh, they're like my boss. I'm like, no, they're not. They need to keep you happy. And the best way to keep you happy is keep telling you that you're good. So if I keep saying, well done, you did really, really well, and you did that, you did
Yeah, you had
£100,000.
Yeah.
You did £100,000 this year, you did £200,000 this year. Well done. But are we looking at the penetration, which is all the FCA stuff? Are we looking at the penetration rates? How many of your clients are leaving without any insurance? Also, how many of your clients are getting level term cover on like life insurance, but they've got no fib, no IP, but they won't do that because, and I understand why, because at the end of the day, if they push them, the broker's going to move to another network who pats them on the back and says, well done, you're really, really good. So it's a really kind of hard, it's who makes the change. And I've struggled with this for years because, you have this thing where it's like, I want to change the industry. And I've realised the only way to change the industry, weirdly, is to change the individuals within it and start watching as my clients, and I've been very blessed for this, where my clients are starting to rise up the ranks within the networks and the networks are coming to me. But ultimately, still, you can't, like we can lead a horse to water, but you can't make it drink. It doesn't change.
But you're showing them the way, though, isn't that? That's what you're doing.
Absolutely.
You're showing them the way. That financial resilience check. What customer's not going to want to go through that? Who's making a big purchase, whether it's a mortgage or a financial review or whatever? Who's going to want that? That's a concept that not many people are going to be doing. I know, obviously, you've got your clients and stuff, but they're not.
No, there's not. I've only got like 50 odd clients, and there's thousands of people who do. You know what I mean?
Why would you do it?
But then peer-to-peer learning, these guys should then, whenever they're, in smaller groups or with their friends in those networks, then have those conversations, have you thought? And it's all about then sharing their knowledge, isn't it?
One thing I didn't expect with that, because I thought, that'd be the case, but what I didn't expect, which again does make sense from if you think of it from a human behavioural point of view, is the resistance to when it actually worked. When I started sharing it, I thought people would be like, "Oh my gosh, that's great," and they didn't. They were like, "That can't be right. That's not true."
Because you're disrupting, isn't it?
Disruptive, and that was never the intention. The intention was, okay, let's share. But you then get met with more and more skepticism, not from the networks at all, like I said, and not from advisors. But it is interesting as you watch, because it's just it's the barbarian at the gate concept. It's something is changing and challenging what we do, and I'm not challenging. I think people do what you want. At the end of the day,
whole risk with social as well, isn't there? In there, sometimes whatever you put out there, you're going to get a certain response. It's almost part of the course.
I don't do controversial stuff for that reason. I've done it in the past. There's no point, and there's no need to be controversial. It's not a controversial thing to say that we should eliminate the risk of every client that they have. And I always find this when people say, well, work to a client's budget, which again is fine, but if there's an available, if they're spending 75% of their income, there's 25% left or 80%, whatever, and that's available, my personal opinion is you should be advising that they fully cover themselves. And then people say, work to their budget. And I don't really get that. I'm like, but that's advice. It's not, they can decide later. But in my opinion, a good advisor, in my opinion, should say, okay, I respect that you only want to spend £100, but your risk requires you to cover,
They're always going to want to spend less because
everybody does. It's an anchor problem. It's a price anchor problem is normally with that. And of course, if you say to somebody how much you want to spend, which is a price anchor, the first thing they're going to say is, oh, as little as possible. And now, whereas instead if you show them the price, that becomes the anchor, then they're comparing it to other things. That's the bit when someone says expensive, and you're expensive to what?
Yeah, how can you compare it really?
You're giving them choice, aren't you, with that resilience check? Like I said, you're assessing, you're taking the 3-month average, you're using facts, you're giving them the choice and education to look at what they're doing and think, okay, maybe I do need to change something here. And then you're educating them on the risks that can happen, that are there for them, and they can go, oh, okay, yes, I'll do something or I won't do something. Yeah. Which is a slightly different approach. I'm keen as well, just as part of your journey. Yeah. Has there been any sort of mistakes you've made along the way?
Lots of mistakes.
Okay. And how did you learn from that? What did you do?
So mistakes for myself or mistakes within the processes? What would you like to know?
I suppose just in general, the journey to what you've
got to do. Lots of different mistakes. One of the mistakes was so not like getting really clear. So the big one was marketing, I'd say, is the first one, and that would be not niching, but niching in a very specific way. So the mistake with niche is that everybody talks about just picking a sector or something, but actually the niche is more just getting really clear on your message and doubling down and owning a space. I didn't do that for a long, long time. That was a big problem. So, I'd move, you'd bounce around, which is when you said, you're a business coach or whatever. And I was like, I don't really know. Because only in the last few years have I really nailed down, I do this thing. We spoke about passionate.
You feel comfortable saying, I know exactly what my...
I know now that I know that. So if someone comes, you ask me, I'm like, I know this works and I know how it works. But that's because I've spent a lot of time doing it. The mistakes I made before was that whole fake it till you make it kind of, I didn't know. I did not know what I was doing. I was trying to figure it out. And I definitely failed on a lot of people's times, to be completely honest, and on my own. So that was one. The other one I definitely would say, which I'm like criminal for, is not bringing in family income benefit and also private medical insurance way earlier on into the process. Like, I've really brought it in now, but I should have brought it in.
And they're so...
It blows my... I mean, I've been brought in the last 3 years, but like, and when I was an advisor, and I won't say the company, because when I was originally like my first ever place in a very large corporate company, I did a post on LinkedIn about this, which says the name of them, but it was like, I never sold anything other than critical illness cover and life, and that was it. And that's something you say about mistakes. That still to this day, there's a lot of things with me from an advisor perspective that haunts me, knowing what I know now, that I really wish I'd done completely. Yeah, like it's so
interesting, because when I advised, I remember doing a friend of a friend's and sold him mortgage, life and kick. But I sold him an FPIP. He had skin cancer, got the full kick payout, but they still had their FPIP or FIB. Yeah. And to this day, it's the one when I go, thank God. But how did I do that? Because we didn't sell much of it, but for some reason...
You did on that one,
on that one. And I go, oh, thank goodness that's there. But so then there's bound to be those hero moments that you go, I'm so glad.
Like, it still bothers me now. Like, it really bothers me now. You know, like, and it's one of those, like, and that's why I'm open to here. Like, there's most of the mistakes I've made were more as an advisor than it was as a coach, like, and a consultant. I think the coaching and consulting stuff, that kind of came naturally to me because I was interested in it. The advice stuff was the bits where I look back and I'm like, just know what you know now.
Yeah,
I'll do a lot of things differently. The other thing as well, which I kind of regret in some ways, is that everyone was told, like, and then this was kind of that post-COVID era. And I think anyone listened to this, just to like know this one was twofold. Was one, being like completely like sharing your life. Like, you don't need to do that in order to sell. You know, if you're an advisor or anything, you don't need to share your life, your kids, your hobbies. Like, it's stuff that really, in my opinion, should be private. It should be kept to you, because once you put it out in the world, which I did, you can't put it back. And
interesting point, isn't it? Because a lot of influencers, they do a lot of that, don't they?
That was what was taught for very much in COVID, and when it first started, it was slightly before COVID, but it was like personal brand. I mean, people misunderstood what personal. I definitely did. Lots of people did. And slowly over time, what I realized was personal brand is a curated brand. So it should be like, I'm known for this one thing, but you don't need to know anything about me outside of that, because it dilutes it. Not only does it it dilutes it, and also it's actually the quickest way to make you generic. And you also do feel like if it works, which mine has, you're not that you give anything to take it back, because I have, but like you would, you know, it's you don't want to. People don't need to see your kids on, and it's a cheat code as well. It's a cheat code online, because people will interact with controversial or stuff that's around, like anything you're sharing, political, personal, family views. It's really easy to do that. I never really did that too much, but I did. But like controversial stuff and sharing family and things like that, and like your own journeys that are like personal things to you.
You can't take it back. It's out there forever, isn't it?
It's out there forever, and also it actually weakens your positioning, which is a really unpopular opinion. But because we're in a world now where people are like, use the word be vulnerable, but there's a difference between vulnerability and a difference between putting something out. Because I always measure that up. Are you being vulnerable because you need support, or are you you're doing it under the guise of vulnerability because you know you're going to get a lot of likes and clicks? And that, personally, I think most people are on that. I know that I was, and I know a lot of people who were, and I think it's changed. But it's being talked about more. People are talking about more of like, let's just use it as a marketing platform.
Have you tried the new and improved Ignite? 4 tools, 1 platform, 0 stress. Ignite combines the power of 4 tools. Criteria, affordability, product and property in one easy-to-use platform, giving you everything you need to research and compare for the best mortgage options. Ignite's data is updated directly by lenders in real time, so you can stay ahead with confidence in a fast-moving market. To see the power of 4 in action, click the link below to book a demo.
And what's your hero moment? What's the moment you go, I'm so glad that happened, or I'm so glad I done that?
For me, leaving and doing this.
Oh, nice.
Yeah. My wife was pregnant.
No regrets.
And it was like, no regrets. My wife was pregnant, and I had this moment where she was pregnant with our first child, and looking back at it, it's absolutely dumb. Like we both laugh at it, but she was pregnant with her first child, and I closed down my mortgage business, because one person paid me £500 to do this. You know, it was like, because it was like, oh, am I going to do it? One person paid me 500 quid for the day to go and help him set up some cameras. It was like, and I shut the mortgage business. I remortgaged all of my money out to be able to live on it, then shut the mortgage business down and lived on it. And she started like that hero moment for me was like, looking back at it now, that when I was able to, because she now, you know, is a full-time mother and she lives the life she wants to live, to be able to give that to her was like when I was able to like buy our house and like our kids could be like, for her, because she supported me. She supported me the whole way through at the beginning, you know, like that. And so that to me was
Well, it was a sign then, wasn't it? It was the
it
right
was
thing
a sign,
to do.
but my gosh, looking back at it, was it dumb? You know, like I look back at it,
dumb.
I look back at it going like, gosh, I was because it was literally, I'm going to go online and get people are going to pay me money to teach them how to do social media.
But sometimes you just have to have that leap of faith, don't you? And you just go, right, I'll take the risk. And if it doesn't work.
People go on there as well, don't they, and just do it. Like you said before, you went on and you just do it. And you see all these people saying, and it's the first time I've ever heard anyone say anything about oversharing and that sort of thing, the vulnerability piece. You would immediately go on there if you were going to be an influencer tomorrow, right, that's what I need to do. Yeah. And you wouldn't know that some of the pitfalls that you're saying, and maybe that isn't the way.
Yeah. There's definitely a lot of ways of that. That's the only thing with the oversharing one is that people remember you for one thing, and so we make sure if you curate that thing you want to know you for. So if you want people to do insurance with you, mortgage with you, you know, wealth with you, then talking about your favourite football team doesn't do that. You know, it doesn't do that. It makes them go, oh, they're a Liverpool supporter. I don't know football, by the way. Yeah, that's what I mean. And then it doesn't. Whereas actually, you know, like I remember one of the guys that trained me. He was like, if my accountant, I want to see my accountant doing accountant things. I don't want to see him, you know, topless on a beach, sipping a pina colada in you know, the Maldives. He was like, that's not what I want to see. And I think that was definitely and that lesson for me when you talk about that was more learned during. We're going through one again now, but that first kind of economical, you know, the first one, the Ukraine bit, when everything was really kind of going quite bad financially with the markets and stuff. But when it was going bad, everything for me at that time was going very good. And that was one of those moments where I was like, you can't really share that. Like I just paid off my mortgage and stuff. And I was like, oh my gosh, I could post about being mortgage free under 30. And then I was like, whoa, like don't do that. Like, and that was one of those moments that it hit me, and then I sold the house and got a bigger mortgage anyway, so it didn't make no difference. But like, it was one of those things.
Don't tell them that either.
yeah, don't tell them that either, because everything is, God, that's a sold the house and now I'm back to the square one. But that's what, you know, I think those are those moments where you look and you go, they don't need to know that, they don't need to see that, and it's a trouble on.
Isn't it? It's just, I mean, I feel like we could talk.
Have I just derailed you from completely off the conversation?
No, I was just thinking, you could sit talking about some of these things and really digressing and getting into the weeds for it.
That's why people work with me for like 2.5 years.
Absolutely brilliant. And of course, I was thinking about it, the additional sort of work and coaching, content, whatever. You're probably always having to think about it all the time. It's that type of thing. You know?
The 3-hour journey here, I'm listening to things, studying things. I just, when you say, do you learn a lot? Like, that's all I do. Right. I literally just, if I'm not with clients, I'm reading. But I love it. Like it drives my wife mad.
Ongoing CPD.
It literally is. CPD is aggressive. I don't understand.
You have no problem filming
your 15 I love it.
hours.
Yeah, I love it. The problem with me is I will just talk about it forever, because I am that guy. Like, if you get me like a dinner table and they're like, what do you think of this? And I'm like, well, actually, that can solve this. I'm precocious pain.
Absolutely brilliant. Absolutely love listening to you talk and the journey you've had and the way you're approaching things in definitely a unique way. Helping advisors, help customers, and that's the main thing. You mentioned about it before. You know, in the protection space, selling more protection usually leads to better client outcomes, and that's what's great about this part of the industry, isn't it?
Yeah,
and great that the FCA is now
looking at it.
Got a protection gap as well. Something we've been talking about for years.
100%. Yeah.
So we've got a bit of a question for you, haven't we, Claire?
Go on then.
Yeah. Well, go you. I have no glasses on.
We've been doing sort of a part of the recent podcast episode we've been asking a question at the end. So we've got one for you. FCA review. So following FCA review, which obviously I've just mentioned there, what's your approach to working with advisors to help them reduce that gap moving forward in terms from an advisor coaching point of view, I suppose?
To be honest, it's pretty much everything we spoke about today, which is, I would say that with the FCA review, and I was actually looking into it I mean, obviously looking at it on and off, but like quite in depth yesterday. I think it's the same thing, which is there's a massive protection gap. Conversations aren't being had. So what we have to do from an advisor perspective is we need to be much more comfortable talking about that, like I said before, this idea of that the mortgage is a significant debt and that is a significant risk and we need to eliminate the risk. We need to start bringing that into the conversation as early as we possibly can to those clients, because people will take stuff if it's been kind of pre-framed correctly, then framed correctly, and then sold at the point when they're expecting it. And that's the issue in the industry. What is happening most of the time is it's just not being talked about. If it is being talked about, it's talked about at the end as a bolt-on. And by that point, then the desire is gone, the need is gone, and then people are walking away with these incredibly large protection gaps. Yeah. And then what is happening is people are then, when they have a quiet couple of months, and I see this a lot, they're going, I know what I'll do. Let's go into the back book and let's go and call a load of people and try and drum up some protection business. And I just think that fundamentally is the wrong way to do it. And it's in line with what the review was saying, which is we need to address the problem at the point when it's a problem. And it's a problem ideally, mortgages is one of them, but we should be addressing it as well. And there should be that protection advisors. If you're a protection advisor listening to this, you should be addressing that at the point of, when someone is having a baby. We should be having connections with the window to the womb and all these type of kind of ultrasound kind of places. And for IFAs, we should be addressing that when the person's coming in, because if we're trying to, as an IFA, trying to make them, with IFAs, for example, I say, look, your goal is to make them financially free. That's the whole point. But you can't be financially free until you're financially secure. And so we have to make you financially secure as well. And that means protect your income, protect your home, protect your health, and protect your legacy. Because otherwise, you're just building it on a house of cards. So I think all of it comes down to having pride in what you do, pride in the idea that this is part of the job. It's not a bolt-on. It's not a bit of extra commission. Shouldn't be worrying about the clawbacks, because this is the thing that comes. It's all, what about the clawbacks? Don't care about the clawbacks. Doesn't matter if they claw back. That's just part of the business. Like, factor it into your costs. For God's sake, like just get on with it. Yeah, it shouldn't be.
Because some customers will. Life will happen to them or something, and there will be a customer that does cancel. Yeah. That happens, doesn't it? You do have to accept that.
100%.
Sounds like from the process you've got. I just think the financial resilience check is great because you're not linking it to products. You're not necessarily at that point linking it to the need. You're bringing in a new way of looking at things, and chances are someone wouldn't have done that with them before. No. So presumably customers are usually receptive to it.
100%. The biggest thing with that is, like I said, it's pre-frame. It's known as pre-frame, frame, and then reframe, which is this idea of, if you think about old sales stuff, it's like, tell them what you're going to tell them what you told them. It's that kind of old school thing, but in a much more sexy way of saying it. But it's reframe, the pre-frame, which is before we're actually going to have a conversation, they're booking in for a call, whatever, maybe this is how we can do it, then make sure that they're aware we're going to be discussing everything within the mortgage package or the wealth package, whatever package we call it. That includes these products. So they're aware. It's not like, just so you know. Then when you're in the call, give it the same amount of time. Don't, in fact, the scripts that we use, it's like a 3-minute script to sell you to do the whole kind of insurance kind of frame. The mortgage is like one paragraph. There's like 5 paragraphs. 4 of them are all about the insurance. Because at the end of the day,
mortgage is happening. Yeah. That's why they're there, isn't it?
Mortgages are pretty straightforward. They're not that big of a deal. It's just literally, you know what it is. It's this. I'll get you to do the best deal I can for your situation. I have to. I'm regulated. If I don't, then you can complain. It's literally like it's such a wonderful part of our industry in a weird way. We are regulated. So you should be framing it then, and then you should be reframing it when you actually do the mortgage, or when you do the wealth, or with insurance, it should be at any point. You should be reframing. We're just saying the same thing again. And the client, if they feel that way, they're not feeling blindsided, and they're absolutely fine.
Surprises.
But I do believe at that point, if they then say no, and this is where it's an unpopular opinion, I believe at that point, you should then respect that and let them move on. So you shouldn't then, in my opinion, be dipping back into the barrel when months are tough to try and catch them again. Oh, do you want to sell a bit of, a little bit of life level? Like, I don't think you should do that. I think you should then wait for the next major life event, which will be a remortgage, and address it again.
Things may have changed, like you say, and their understanding piece at that point. They probably understood it and they made their informed decision. They decided against it.
Respect their decision, 100%, exactly. Which I think is the biggest problem. And that's where a lot of the old school training is like, I've heard stuff when it's like, I'm not talking to you, I'm talking to you. What would you do? Yeah. I'm like, what are you doing? In any point in life ever, in the history of the world, has anyone ever gone, oh yeah, great. I love that you challenged me and made me feel stupid. I will pay you £200. Like, it's the dumbest thing ever. So the moment that objection comes up, acknowledge the objection and just, okay, cool. That's fine if you want to do that, and then move on.
That's absolutely insightful beyond belief. I'm loving that. I'm loving that. That's amazing. Ash, a little birdie tells me, I think you've got a question.
I've got one written down here,
next guest,
I got one here, yeah. So I've got to get with dyslexia because I'll definitely forget. So my question I've got here is, what's one conversation that you used to avoid that now brings you the greatest sense of achievement? Which is all about kind of, you know, how you think and stuff.
Yeah.
Amazing stuff. Well,
Looking forward to
what do you think of that then, Clodagh?
Yeah, I think it was brilliant.
That was an amazing episode.
yeah.
Thanks, Ash. Appreciate
Well
you coming.
educated.
Brilliant to meet you face to face. And obviously, we'll see you online too. So
Definitely.
thanks
Thank
very
you
much.
Thank you.